Hello and welcome to my morning report analysis videos on Thursday 2nd of March with me, Richard Perry, market analyst at Handset Markets. We've got a fairly flat morning, nothing really doing in terms of direction, but we do have a strong dollar and that continues to run higher. This strong dollar that we've seen in the past sort of few days really has been really accelerating on the back of Treasury yields pulling higher. Now this move on the 2-year Treasury yield actually broke out to a multi-year high yesterday above the 1.304% level yesterday, just pulling back a little bit, but that is multi-year highs, and that has come on the back of further Fed comments from Lael Brainard this time. Lael Brainard is a habitual dove on the committee. She's sort of coming out saying that Fed rate hike would be appropriate relatively soon. So yeah, that is just another one on the list of these Fed speakers that are hawkish or moving hawkish. And Lael Brainard being a dove, coming out with a hawkish comment, that certainly sort of adds weight to the argument for a March rate hike. And we're now seeing sort of probabilities of a March rate hike up in the 60s now, according to CME Group FedWatch. So this is certainly a key move that's driving the dollar strength. Dollar has broken out now above the sort of February resistance to the highest now since 11th of Jan. So the Fed is driving the dollar at the moment, and it certainly seems to be impacting across forex majors. The yen is the main underperformer. But also the Aussie and the Kiwi are quite strongly lower as well, interestingly enough. But certainly at the moment, this is the key factor on markets. In terms of equities, they're consolidating today, perhaps even looking a little bit corrective, potentially on the back of such a strong run higher. You've had equities storming higher in the last sort of day or so, really strong upside moves that we saw, but today is a little bit of a consolidation day. We've got Eurozone inflation data out soon. That is at 10 o'clock. Eurozone inflation data expected to increase to 2% on the flash February data, and interestingly enough, the core data is expected to stay at 0.9%. But that would be interesting considering German inflation data yesterday coming in ahead of expectations, or higher than expectations. Much beyond that, you're sort of looking into the US afternoon, where you got the jobless claims at 1:30. Where are they? Or the commodities jobless claims, there you go. 243, bang on, basically where we were last week. 244, and then not only that, you've got Canadian GDP at 1:30 as well, expected to come in at 0.9%, so basically in line with where we were last reading. And let's have a look at the rest of it. It's nothing really. Excuse me. Nothing really until you got the Japanese CPI late doors to at 11:30. Expected to actually improve to flat on the CPI and the core nationwide, which is interesting. And that will be a positive move, presumably for the yen, but also watch out for this Tokyo CPI, which is actually expected to drift back to flat from positive. Actually, Tokyo CPI is forward-looking. It's the February data rather than the January data for the nationwide data, so that has an impact as well. Right, that moves me on to my chart today, which is silver. Now, we've had a strong dollar, but has that impacted silver? Not really, has it? Look at this uptrend channel on silver remaining. We've seen a consolidation actually in the last few days. That's come as gold price has corrected, but this correction hasn't really impacted the silver chart at all. Interesting that we're seeing this move on silver coming as we're seeing the just drag in the Bollinger Bands. Bollinger Bands still up towards the highs of the Bollinger Bands. In terms of what we're looking out for buying into dips, you'd say the 20-day moving average barely even get towards that. That's around which the Bollinger Bands are calculated. That comes in around $18 today, and that would be interesting if we do get a little mini correction. But initially you've got the support that comes in around 18. Sorry, that's gold. Around 18.19, which was the reaction low in the last few days. But generally speaking, the sort of trading range has been between sort of 17.80 up towards 18.14, which is the breakout that we saw. 18.14 there. So there is scope for a bit of a near-term correction, but again, back towards 18.20 maybe. That would unwind the hourly momentum indicators, but certainly the daily ones are still holding up pretty strongly. RSI at 67, stochastics nicely strong, and MACD lines also nicely strong as well. So we're still holding on to all these gains on silver, and I think unless you see a dramatic, significant selling pressure coming through gold, I don't really think silver is going to be pulling lower all that much. So for now, I think you've got to stay with this trend. Trend is your friend on silver, and I think that's pulling up towards $19, which is this November key high that we saw. So I think continue to run this one higher. So I wish you good luck in your trading today, and I'll speak to you later.